I'm going to share with you guys my Illuvium trade, and the reason why I'm doing this is for you to understand exactly what I look for as a trader for a high probability move. What are the chances of something happening? Because sometimes you're right, sometimes you're wrong. And we talked about Illuvium a lot in the Discord group. We've talked about it in previous videos. In fact, I was talking about Illuvium here, top 5 altcoins you can't miss this week. That was 4 weeks ago. And the reason why I liked Illuvium then was this here. It was a bullish divergence. We had a bullish divergence on the RSI where we put in a higher low and we put in a lower low on price action. We understood something had to happen. We understood we needed a breakout of trend. And once we got a breakout of trend, that's signaling that the price is catching up to what the RSI, i.e. the price action, buy-in and selling pressure is telling us. So we understood that there was going to be a big move, and that big move from the bottom to the top, my friends, was 174%. So I'd said at this level, expect exhaustion. And when you've moved 174, 175%, you expect a big pullback. So we'd stuck our Fibonacci on there for second chance entries. And that second chance entry, hopefully, is about to happen in the next couple of days. So I'm going to show you exactly how I'm playing this, why I'm playing it like this, and why there's 5 types of traders all buying at the same level. And what happens on the back of that when 5 traders buy on the same level. Some of the buy orders aren't going to get hit, but let me tell you now, there's going to be a surge in price action when this level gets hit. Okay, we're going to talk about the key areas of support right now. A couple of things are going to happen, guys. This might not get hit. If it doesn't get hit, then that's tough. Move on to the next one. That's my strategy. That's the way that I play things. I want a high probability move, and for me to get a high probability move, it needs to pull back to my area of support. We're going to talk about why it's a key area of support very shortly. But firstly, we're going to do something a little bit differently. We're going to read some candlesticks, and we don't do that very often on this channel because recent candlesticks can tell a bigger story than what current indicators or anything else can tell collectively. So what's happened on the day here? Firstly, what we're going to talk about is couple of different candlesticks and how you can read them. Say you've got a close, an open here, and you've got a big candle to the upside. There's no wick to the upside. There's no wick to the downside. That is a full-bodied bullish candle. That's as bullish as it can get. Now you've got the open here. Flip it in reverse. You've got candle to the downside. Exactly the same. That's a full-bodied bearish candle. So if you get a full-bodied bullish or a full-bodied bearish, expect a continuation in that direction the day after. Now, let's bring some wicks into it. What do the wicks represent? The wicks represent the extreme high and the extreme lows of the session. This is the daily chart, so the wicks represent the high and the low of the session. So at some point during this session, the bulls have managed to push price all the way up here, and at some point during the session, the bears have managed to push price all the way down here. Now, what happens if the bulls push the price all the way up, and then the bears manage to come all the way back down, taking off the gains of what the bulls have given? You end up with something that looks like this. It's bullish because it's green. That is the most bearish bullish candle that you can get because the bears have met with a reaction and they've pushed price all the way back down, all the way back down, all the way back down. So is that exactly what we want for Illuvium? Because obviously we want Illuvium to go up in price as a trade and perspective. But before that, I need to get an entry. The reason why I'm looking for an entry and the reason why I'm looking at this candlestick to show me an indication that there could be potentially further downside is because we tried to have a 3-bar reversal here. There is pretty much a full-bodied bearish candle all the way to the downside. So it was met by this, an indecision candle. So we've managed to push price about a third of the previous candle. And then that was met by this reaction here where the bulls pushed price all the way to $19.05. And then we were rejected all the way back down here, nearly at the 61.8% retracement. So the 61.8% retracement is usually a key area. 78.6% retracement is a bigger area for me. And what I want is a rejection back down to the 78.6 around about these key areas here. This is where I'm interested, between 1466 and between 1518. That's the 2 areas that I'm interested in. I'm going to tell you why. You've got traders, you've got bull traders and you've got bear traders, you've got buyers and you've got sellers. Sometimes the bulls become the bears, sometimes the bears become the bulls because traders go with the flow of money and that is with the trend. So you can see that the bulls have got momentum. We've put in a new high, we're coming back and we're retracing. We're retracing, and I want to retrace back to this 78.6 between 1466 and $15.08, which is my buy zone. The reason why it's my buy zone is I've got 5 little fellas here, different types of traders. So remember the key psychological round number that we talked about in the last video. Why does that act as support? Imagine you've got 1,000 traders, a million traders, and you've got $15. And then you've got $14.88, $14.77, $14.96, $15.03. Collectively, people psychologically think of round numbers. $15 is a round number. $15 is a number that people are going to put buy orders in. So you've got your $15, your psychological round number traders. That's this. Psychological round number traders all putting buy orders in at $15. We know we've got buy orders at $15. Your next one is this. You've got resistance here, resistance, resistance, resistance. We need to reclaim that resistance and flip that as support. So you've got your RS flip traders, resistance, support. They're waiting for exactly the same level, 1466 to 1508. You've got this, your 200 moving average traders. This is the 200 daily moving average. That carries big weight when you're above your bullish, when you're below your bearish. When you come back, a high probability that you're going to get a reaction from there. There's your moving average traders. You've got your 78.6% retraders. That's your 78.6% retracement all the way down here. That's $14.66. So you've got your Fibonacci retracement traders. And then guess what? Stochastic RSI, we said this was overbought here. This was overbought at this level. This needed to cool off. It's coming back into oversold. When it comes back into oversold, if it comes back down to this level, the stochastic would have reset. And that's your stochastic RSI traders. So we put in hypothetical projections, and the hypothetical projections was from this previous swing all the way to that swing. And if we pulled back to the 78.6, if we pulled back to this level, we need to monitor it. We need to watch where the low is. You've got projections up here. You've got your 1272, which is $31.72. You've got your 1618, which is $36.19, which coincides with this big resistance point here, which acted as support, support, support until we fell through. That's going to be resistance. So if you do like this video, guys, don't forget, subscribe to the channel because I'm going to be doing more updates during the course of the week. Take care of yourself. Goodbye from me.